I think we're just 12 weeks into the institutional adoption phase, and every day we watch, money flows into the spot Bitcoin ETFs, and you see 50 million, 100 million, 200 million. That's how markets work, right? Like markets very confused with 27 different ideas, and then all of a sudden one idea works. Remember like search engines? And there was a bunch, and then there was Google.
Exactly.
Remember how about mobile phones? There was a bunch, and then there was Apple. I think markets work like that, and then something starts to work, and that gets bigger, and it catches on, and it catches fire, and then people start to copy it, and then it becomes something.
MicroStrategy's founder and former CEO, Michael Saylor, contends that Bitcoin, the world's leading cryptocurrency by market cap, is ushering in a new and progressive era. Saylor highlights the approval of several spot Bitcoin exchange-traded funds by the U.S. Securities and Exchange Commission in January as a pivotal moment, signaling a significant regulatory shift. This move dispels misconceptions surrounding Bitcoin, such as its association with illicit activities, and garners interest from major Wall Street players like Fidelity and BlackRock, solidifying Bitcoin's position as a long-term investment opportunity rather than a passing trend. The success of spot Bitcoin ETFs serves as a testament to these developments, indicating a promising future for the leading crypto asset. Saylor believes that the approval of spot Bitcoin ETFs has opened the doors to thousands of financial advisors and institutional investors, who are now exploring ways to engage with the cryptocurrency market. He likens the current phase to a Bitcoin gold rush era, projecting its continuation for at least another decade. During this period, Saylor anticipates a growing number of companies adopting the Bitcoin standard, akin to MicroStrategy's decision in August 2020, which itself marked a significant turning point for Bitcoin.
How many times have you eaten junk this week? You're just wasting your money. Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. Skip your next junk meal and instead invest in your education. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think in time they will. I think in the years between 2025 and 2028 or 2029, you'll start to see companies starting to adopt this strategy because it gives you a very low cost of capital, and because Bitcoin is a good asset, and because there's a lot of demand, etc. But we were unique because we had a need. We were in the right place at the right time. And as I said, we didn't really have the plan in the middle of 2020. The plan presented itself. It's hard for anybody else to look at this because 18 months ago, Bitcoin was 16,000 and everybody thought the crypto economy was going to zero. So it's only really been in the past 6 months. You could even argue 12 weeks. It's really January when the SEC approved the spot ETF that the mainstream consensus in the world was Bitcoin is an asset, it's not going away. I used to say, if it's not going to zero, it's going to 1 million. But there are a lot of people thinking, oh, it's too good to be true. The government will take away from you. It'll be banned. And I think turning the corner was really essential. And the turning of the corner is when people realize it's not a cryptocurrency, it's a digital property. And if it's a digital property, it's a store of value, and I'm going to buy it as a store of value or buy it through the ETF and hold it a long time. And when the SEC approved 10 Bitcoin ETFs, mainstream Wall Street consensus shifted to, okay, it's going to be around, and then opened up an avalanche of enthusiasm. And that kicked us into this Bitcoin gold rush era. For the next 10 years, every quarter, there'll be more enthusiasm, more adoption, more awareness. But it's like year one of Bitcoin as an institutional asset. Companies will do this, but it's hard for them to move that fast. Normally, if something is new for the last 3 years and you're in the 4th year, you're an early adopter. So that's how fast corporations move. So I think it does happen. But I think that we're still very close to the crypto winter. So many bankruptcies, so many meltdowns. We need to get a little bit of distance from that and stabilize. And at that point, more conservative companies will start to move into the space. There's still a lot of regulatory uncertainty. I mean, it wasn't clear what's going to happen with every single crypto application or use case everywhere in the world for the past 24 months. So there's a lot of people have been waiting for certain shoes to drop or for certain decisions to be made. I think that what you could say in the middle of 2024 is it's pretty clear in the U.S. capital markets that the regulators have embraced Bitcoin as a commodity, a digital commodity, and the investors have embraced Bitcoin as a digital property or store of value investment. And those two things there's broad consensus on. And if you're building something based on those two insights, you can build a very, very big business, right? Like MicroStrategy's gone from 600 million enterprise value to 35 billion. You can build something big, but those two insights, they weren't clear 2 years ago. Yeah. I couldn't have said, 10 companies on Wall Street will all agree on that 2 years ago, and the SEC will let you sell that. I think we're just 12 weeks into the institutional adoption phase, and every day we watch, money flows into the spot Bitcoin ETFs, and you see 50 million, 100 million, 200 million. You can see it's starting to simmer, and I think that will cause people's wheels to turn, and they'll start to think about what's the next thing. I think we're still early, and that's a good thing, right? Because what that means is there's an opportunity for you.
Yeah, exactly.
Right?
Okay.
You don't want everybody to agree. You want everybody to be confused about things so you can act.
Regardless of the opinions of critics like Jamie Dimon and Warren Buffett, Bitcoin is emerging as the premier digital asset, akin to the Google and Apple of the digital realm. Unlike physical commodities such as gold, grains, or oil, Bitcoin is not encumbered by many of the limitations associated with them. For instance, no other commodity shares Bitcoin's finite supply cap. If gold prices skyrocket, miners can increase production, flooding the market and driving prices down. Currently, experts estimate there are approximately 20 million tons of gold in our oceans, each ton valued at over $74 million. While it's improbable that all this gold will be mined, higher prices incentivize increased mining efforts. This dynamic applies to most commodities, but not to Bitcoin. Even assets with relatively fixed supplies, like real estate and rare art, have constraints that don't apply to Bitcoin. Returning to Saylor's interview, he delves deeper into Bitcoin's role in our rapidly evolving digital landscape.
Bitcoin is better described as a city in cyberspace. If you imagine a city that's 276 blocks high, 276 blocks wide, 276 blocks deep, that would be about 21 million. And it's a network, a shared network that people all around the world voluntarily enter into, and you can buy one of those blocks, and you can take custody of that block, and you can keep it for 100 years, and you can give it to your children's children's children. So if you think of it as digital property or the greatest city in cyberspace, when you move into Manhattan and you tell all your friends to move in Manhattan and they all move to Manhattan because Manhattan's the greatest city in the US and the price of land in Manhattan goes up, that's not a Ponzi scheme.
Yeah, exactly.
That's an example of a place where everybody wants to live because it's the best city to live in North America. And people have been moving to Manhattan for 400 years. And the price of real estate in Manhattan has been going up for 400 years. Imagine a city in cyberspace where 8 billion people want to live. And, they don't live physically, but they live economically. Everybody in the world has a problem. And the problem is they would like to store their capital and preserve their capital. And they'd like for someone not to steal it, right? So they all need this bank in cyberspace where they can store their life savings and know that it will hold its economic value. If God came down from heaven and offered to set up a bank with 21 million coins and keep the money in heaven and let you telepathically zap it back and forth and make sure no one cheated anybody and do that for the next million years, that would be a better bank than any bank we have, and it would be a better currency than we have. But, God's not going to do that. And so the next best thing is if you create a bank based upon cryptography, based upon computer science, and you give a copy of that software to everybody in the world that wants to use it, and then everybody voluntarily buys and sells those units we call Bitcoin and holds them if they wish to hold them. And anybody that tries to cheat the system gets kicked off the network. So Bitcoin is better thought of as a protocol a fair, equitable protocol for people to trade economic value or store economic value. And it happens that the more people that use the protocol, the more valuable it becomes. Not so different than English, the language. The more people speak English and the more money the people that speak English have, the more useful it is for you to learn English. And like New York City, the more people that move to New York City with more money doing more things, the more valuable your real estate is in New York City. So it's basically a network. It's the world's greatest monetary network, a digital monetary network. And what's special about it is it's open, permissionless. Nobody owns it. No country controls it. No company controls it. No individual controls it. It is the result of an experiment where the 50 predecessors all failed and thousands of copies failed. And it's the winner in this Darwinian market economy for money. And what you have is a network where hundreds of millions of smart people with money have entrusted hundreds of billions, now $1 trillion or more of money to the network because it's a much more efficient way to do things. It's just the world's first scientifically rational engineering protocol for economics, for economic cooperation, or for monetary interchange. And that's something everybody needs. Nobody can stop, but most people don't understand. And the reason that it makes sense to spend 100 hours studying it right now, and the reason it makes sense to buy Bitcoin is all of my best investment ideas are things nobody could stop, everybody needs, and nobody understands.
As the world rapidly shifts from the physical to the digital realm, it's natural for our financial system to undergo a similar transformation. This transition often eludes critics of Bitcoin, such as Diamond, who may be too entrenched in traditional ways to recognize the inevitability of change. Fortunately, these outdated methods are fading away, much to the benefit of everyday investors who have long been exploited by the conventional finance industry. We're entering a new digital age, catalyzed by Bitcoin's inception about 15 years ago, and it's a phenomenon that's here to stay. Saylor's interview underscores this sentiment, predicting a decade-long gold rush era for Bitcoin. What are your thoughts on Saylor's insights and his forecast for Bitcoin's future? Feel free to share your thoughts and comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.